Hello, my name is Jason Bittiger, and I am part owner of Anchor Insurance and Financial Services along with Teresa Bilton. And we're putting together some slideshows to kind of go over some of the questions that our clients have the most, some of the things that they're most confused on. This one is on auto liabilities and how to choose what is right for you. Now, the first place we're going to start when going over liabilities is what exactly does 50, 150 mean? You'll see it on every insurance policy. Sometimes it'll be 25, 50, 25, which is the state minimum. Here at this office, we always recommend going to that next level up. It's usually around about $10 a month extra if you're an average driver. For your liabilities to go from 20, 25, 50, 25 to state minimum to get double the coverage to 50, 150. So there's levels above that also. 100, 300, 100 is the next level up, and then 250, 500, 100 is the next level above that, which you need for umbrellas and such. So, but that's a whole other discussion. First thing we're going to do with this though is go over what that 50 means. That first 50, that is the max amount that the insurance carrier will cover before you have to start coming out of pocket for medical bills, lost wages, and pain and suffering. And that 50 is everything's in thousands. So that 50 is 50,000 actually. Just like 100 is actually 100,000. And just like the other 50 is 50,000. So that first 50 is for an individual. Now that 100 is for the entire accident. So that is the max amount that the insurance carrier will cover for the entire accidents, medical bills, lost wages, and pain and suffering. And again, that 100 is actually 100,000. And now the second 50 is for property damage. So that is the max amount that the insurance provider will cover for property damage, the other, any vehicles that are in the accident. So what you're looking at there is a good idea to have 50,000 because a lot of new vehicles are $35,000, $40,000 vehicles. So you want to be sure that if you were to get into an accident and you total one of those, that you're getting the whole amount from the insurance company. You're not having to come out of pocket like you would if you had the state minimums at 25,000. So again, for that doubling the amount of coverage, it does not cost that much more per month. Now, the three types of auto liabilities are your liabilities to others, and this is what protects your assets. So basically, you end up running into somebody, you cause the accident, that's where your protection comes in. Now, the uninsured motorist liability is to protect you in case that person that hits you, so you do nothing wrong, you get hit, and they don't have insurance or they hit and run. We see a lot of this in parking lots. You come out and your vehicle has a dent in it or ding, or you got rear-ended somehow and you just don't know who did it. So then there's the underinsured motorist liability, and that is for people that don't have enough insurance. So again, not any fault of your own, they hit you, but they don't have enough insurance. Maybe it's a multi-car accident. Maybe they just don't have enough and it's a bad accident. This protects you so that you don't have to come out of pocket. Now, your protection, I'm going to go over a quick scenario here for your protection. And we always say that we want your liabilities to match your assets at a minimum. And here's a quick example. Let's say you cause an accident. Nobody's above it. That's why it's called an accident. It happens. Now, the person that you hit is going to sue you for lost wages, for pain and suffering, for medical costs. And they're going to, of course, make it the worst thing ever. And they're going to sue you for, $3 million, let's say. And then their lawyer's going to find out what your assets are. They have ways of doing that. So they're going to know what you're worth, and they're going to ask for a much larger number. Your lawyer is going to say, look, if they sell all of their assets, they're going to be able to give you this much money, let's say $250,000. Now, it's their job, their lawyer takes it back to them and they have a decision to make. Do they want this to lag out for years and years and years and see where this goes, or do they just want to take the settlement offer and be done with it? Now, most of the time they're going to just take the settlement offer, especially if it's a big amount like that. So in this scenario, the insurance company is going to pay that settlement and you get to keep all of your assets. And that's because you were insured for the correct amount. Now, we do say at minimum that's what your insurance should be, because if they don't settle for that, you might need a little bit extra. So you have to be aware of that. We, recommend you want to at minimum match your assets, but it is, always good for risk assessment reasons to go a little bit more. So now we're going to go over uninsured motorist coverage. And uninsured motorist coverage is coverage for an accident that is not your fault. Somebody hits you, but let's say they don't have any insurance or it's a hit and run. That's where you're going to have to come out of pocket for if you don't have this insurance or you don't have enough of this insurance. So the first question you're going to ask is, how good is your health insurance? You have to look at your health insurance deductible. Do you have a high deductible? If you do, you're going to want a little bit extra uninsured motorist coverage, because it's going to cost you less to raise your uninsured motorist coverage on your auto policy than it is to lower your deductible on your health insurance. I guarantee that. Now, the next thing you got to do is look at your out-of-pocket max also, and you look at it the same way, because you don't want to have to come out a whole bunch of money for your medical bills if you don't have to, because it was covered in your auto insurance at a smaller rate. So that's something else you have to think of. Again, this is something that was not your fault. You shouldn't be punished for it. Now, the next thing you have to look at is long-term care coverage, because there's a lot of people, especially in my area, that have Medicare supplement, so they think that they don't need a high amount of uninsured motorists, but they're also older, so chances are if they get into an accident, it's going to affect them worse, and they might have to go to long-term care. And so that's where your Medicare and your Medicare supplement is only going to cover you up to a certain amount of days, and then you're on your own. So you want to look at that. And then the next thing you want to look at is, how much is my vehicle worth? If your vehicle is worth $35,000, then you're not going to want $25,000 in uninsured motorist coverage. That's just not going to cut it. The insurance company is going to write you a check for $25,000 and you're on your own for the other $10,000. Again, you're going to get punished for something that was not your fault, when you could have just spent a couple extra dollars each month on your uninsured motorist coverage and be fully protected. So you want to, again, another scenario, if you have a $10,000 vehicle, you don't want $50,000 or $100,000 in uninsured motorist coverage either. So you can overinsure yourself, also something you got to look out for. Now, the next one is, you have to ask yourself the same questions when you're looking at underinsured motorist coverage, because it works sort of the same way, except instead of the person not having insurance that hits you and causes the accident, they don't have enough insurance. Let's say they have the state minimums here in South Carolina, the 25, 50, 25. So basically, they are going to cover $25,000 worth of your medical bills, and then your health insurance is going to have to start picking it up. So in that scenario, you might want to get 25 or 50,000 in coverage on that if you have a high deductible, or if you have a high out-of-pocket max, or you don't have long-term care. You're going to want to make sure you have something that goes on top of what they have. Another scenario, we see it a lot with vehicles, where they have the state minimum 25,000 here in South Carolina, and it's a 3-car accident or a 4-car accident. So you might have, a $20,000 vehicle, and they've got $25,000 worth of coverage, which if it was a 1-car accident, that would be enough. But it's a 3-car accident, so their $25,000 is going 3 different ways. And it's up to the insurance company how to divvy that up. It's not an equal split, usually 1/3, 1/3, 1/3. So you could end up, even though they have 25,000 in coverage, they could only, they might only pay you $5,000 for your vehicle when it's all said and done. So these are scenarios that you have to look out for, because again, you don't want to get punished for something that was not your fault. That concludes what we're going to go over with the auto liabilities, and there's a little bit more to it. I know a lot of things probably need to be cleared up a little bit because I went a little quick, kind of breezed over some stuff. So if you do have any extra questions, gladly give us a call, or stop in and see us. We love the company, and our website is down at the bottom there. If you want to jump on our website, check us out a little bit, send us an email, that'd be fine too. And want to thank you for your time and sitting through everything, and I hope that you learned.